Hey traders, what's going on? Jamie Setley here. It is February 9th, 2016, and I want to take a look at gold. Obviously a heck of a run here the last few weeks, really since the start of February, and have just hit a very important level and kind of reacting to it. So let's take a look. All right, gold is actually up at its best levels since June of 2015, okay? And you know, a couple weeks ago, right here is January 29th, we actually had presented to SB Trade Desk clients a chart with gold here in this Andrews line, this Andrews structure, talking about the fact that you had a high, resistance on December 4th. The same line was resistance on the 20th. And the same line was support on the 29th. All right. It was a bullish event, kind of classified it as fairly bullish behavior. And, wrote that gold could trade higher from here. And sure enough, we thought, you could get some 1130, a little resistance. We had it for a day. And obviously since then, gold's gone straight up into 1200, and going into this week, actually, during the update, the longer term charts over the weekend, talked about 1200 as a level that can influence, if you will, for some sort of a counter trend move, if indeed gold is turned up and weakness is counter trend. We actually don't really know yet. Okay, but the way the market's traded here, you have broken an important level. The market pulls back. You want to watch for this median line to act as support. And just remember that you are coming off of multi-year lows. Okay. And typically you do need to build a much larger base in a market like gold before you can see a substantial rally. By substantial, I mean, getting back to the 1400 area, potentially 1430s, which is actually, the August 2013 high, which is where you'd kind of have the beginning of the final leg of the decline, which is a choppy wedge. Typically those are fully retraced, but it takes time to build a base to work up towards that level. So keep that in mind. We have traded high, here recently up into the June 2015 area. You do have technical levels from multiple methods horizontally, just simply the June 2015 high really sold off from that level. You do have slope, simple trend line from the 2014, 2015 highs. Uptrend slope, which again was the same slope that I identified the really important behavior change here back on January 29th before we took off to the upside. So there's a lot of stuff here that could see a pullback. And gold being, a fairly clean technical market at this juncture, I think could tell you some about what might happen potentially over, the next few days in some of the other markets, particularly FX, okay, and particularly Japanese yen. So connect those dots and you'll have a better shot at catching some moves in the yen, possibly, which by the way did complete a massive, huge year-plus long head and shoulders top in dollar yen today. Head and shoulders bottom in Japanese yen. So with gold trading the way it is, Japanese yen trading the way it is, might want to watch the two together to potentially hone in on entry points in one or the other or both. Okay? All right. So that's it for today. Again, looking at a gold chart, whether you're trading gold or not, I think helpful to know where important levels reside, so that you can potentially get some better confidence in trading some other markets as well. And I'll leave it at that. Okay, so that's it for today. Jamie Setley here, signing off. Take care. Bye.